Have you ever found yourself scrolling through your investment app, finger hovering over the buy button, torn between Nvidia and Microsoft? Or maybe you've been watching the AI revolution unfold and thought, how can I jump on this AI train without putting all my eggs in one basket, or rather, one stock? If you've ever grappled with these questions, don't worry, you're in good company. Today we're diving into the powerhouse duo, Microsoft and Nvidia, who aren't just competing, but sometimes teaming up like the Avengers of artificial intelligence. Yep, that's right. Microsoft has teamed up with Nvidia to create an AI super squad, with Nvidia's hardware powering Microsoft's Azure AI software.
Together, we are innovating to make Azure the best cloud for training and inference.
But while these two tech giants might make a great pair when working together, they also stand strong on their own. In fact, each has unique strengths that make them compelling investments for different reasons. So today we're going to put Microsoft and Nvidia head to head, comparing their performance, growth potential, and AI innovations to help you figure out which one deserves a place in your portfolio. Before we dive deeper, if you're enjoying this already, don't forget to give us a like and subscribe. We've got plenty more like this coming your way. Now, let's get started. So, let's begin with Microsoft, ticker MSFT. Microsoft has been at the forefront of software and cloud computing for decades. Known for its vast product ecosystem and dominant cloud platform Azure, Microsoft has become a critical player in the AI revolution. Its strategic partnership with OpenAI, the company behind ChatGPT, has solidified Microsoft's position as a leader in generative AI. This collaboration allows Microsoft to integrate cutting-edge AI capabilities across its entire suite of products and services, positioning it at the heart of the AI movement.
Well, generative AI is the single most significant platform transition in computing history.
But before we proceed, here's a quick question for you. What's one overlooked stock market indicator you think more investors should pay attention to? Share your insights in the comments below. Now, let's turn our attention to Nvidia, ticker NVDA. Nvidia has made headlines as a leader in the GPU space, but its AI hardware developments have transformed it into a critical AI player. Known for its powerful chips that fuel AI and machine learning applications, Nvidia has become the go-to provider for AI hardware infrastructure.
Now, one of the initiatives, of course, is accelerated computing. Offloading general purpose computing, accelerating all the software we can, because it improves energy efficiency, reduces carbon footprint, reduces cost for our customers, improves their performance, so on and so forth.
Now, let's break down the comparison across several key financial metrics. First up is revenue growth. Microsoft has demonstrated impressive growth over the past decade, nearly tripling its revenue from around $80 billion in 2015 to $245 billion in the trailing 12 months. Nvidia, while experiencing explosive growth, has grown from under $10 billion to $96 billion in the same time frame. And while Nvidia's growth has been remarkable, Microsoft's steady rise reflects its ability to diversify its revenue streams and leverage its existing cloud dominance to push further into AI services. To time these stocks better, investors can track the 20-day and 50-day exponential moving averages. If the price consistently remains above these EMAs, it suggests the stock is in an uptrend. For Microsoft, these EMAs help signal broader sector growth, especially in the tech and AI sectors. For Nvidia, it reflects momentum from its AI hardware dominance. Next, let's talk about operating profit margins. Microsoft boasts an impressive margin of 44.64%, reflecting its efficiency in delivering high-margin cloud services, software, and AI products. Nvidia, though higher at 61.87%, has shown more volatility over the years due to its exposure to cyclical industries like semiconductors. Microsoft's stable margins provide a compelling case for risk-averse investors who prefer consistency. Utilizing the relative strength index is a smart move here. For Microsoft, if the RSI dips below 30, it may signal an oversold condition, an ideal buying opportunity. On the other hand, for Nvidia, an RSI above 70 suggests the stock might be overbought, so timing matters when entering or exiting a position. When it comes to cash flow margins, Microsoft stands almost toe-to-toe with Nvidia, showing a strong 48.36% cash flow margin compared to Nvidia's 50.53%. While both companies excel in cash generation, Microsoft's long history of cash stability makes it particularly be attractive for investors looking for reliable returns, even in volatile markets. This is where Bollinger Bands can help. For Microsoft, these bands are useful in spotting potential price corrections in an otherwise stable stock. If Microsoft's stock price touches the lower Bollinger Band, it could indicate an oversold condition and a possible entry point. In terms of future growth prospects, analysts expect Microsoft's earnings per share, EPS, to grow at 15% annually over the next 5 years. While Nvidia's projected EPS growth of 52% is higher, Microsoft's more stable and diversified revenue streams across cloud computing, AI, and enterprise solutions make it a lower risk play for those not seeking high volatility. To take advantage of Microsoft's stability, use the moving average convergence divergence to identify momentum shifts, especially during market dips. A bullish MACD crossover but can confirm upward price trends for Microsoft in a stable market. Both companies excel in return on invested capital, ROIC. Microsoft has a solid 29.4% ROIC, reflecting its ability to generate value from investment. Nvidia's ROIC is much higher at 73%, but this figure may moderate as competition in the AI hardware space intensifies. By combining RSI and MACD, investors can assess momentum and potential reversals in Microsoft stock. A dip in RSI combined with a MACD crossover can confirm an ideal entry point during a broader market pullback, making Microsoft an excellent long-term investment with lower volatility. Finally, let's talk valuation. Microsoft is trading at a forward PE ratio of 28.7, which is nearly on par with Nvidia's 29.67. This valuation makes Microsoft attractive for investors seeking exposure to AI without betting on rapid, high-growth returns like those of Nvidia. A useful tool here is to watch for a golden cross in the EMAs. When the 50-day EMA crosses above the 200-day EMA, and it signals a long-term uptrend. For Microsoft, this can be an indicator that its AI and cloud-driven growth still has plenty of room to expand in the coming years. Looking at the comparison, Microsoft stands out with its diversified revenue streams, stable cash flow, and consistent operating margins, making it an excellent choice for investors looking for a steady, low-volatility AI investment. Meanwhile, Nvidia's explosive revenue growth, higher margins, and stronger return on invested capital make it a more compelling option for high-growth investors. Your decision ultimately depends on whether you prefer the stability and broad tech leadership of Microsoft or the fast-paced, high-risk growth potential Nvidia offers. So, which is the better AI stock to buy today? Microsoft offers stability and steady growth, but Nvidia packs more potential for higher returns. Or why not just buy both? Let us know what you'd pick in the comments. Ultimately, choosing between Microsoft and Nvidia depends on your investment style and risk tolerance. Microsoft provides steadier growth and broad AI exposure, while Nvidia offers potential high returns with greater volatility. Both companies are key players in the AI revolution and can enhance a diversified portfolio. If you found this analysis helpful, please like this video and subscribe for more investment insights. Remember, this video is for informational purposes only and does not constitute financial advice. Always consult a qualified financial advisor before making investment decisions. Thank you for watching Simple Investing Secrets. Until next time, happy investing.